Hello, my name is Lucas Topolbe. I'm from Fidelity International, and today I'll be talking about the global mid-cap opportunities. Now, global mid-caps, many investors may not be aware of the types of companies we're looking at when we're talking about global mid-caps. And what mid-cap stocks on a global level are compared to an Australian market is actually quite large companies. So if we think about what are some comparable Aussie names in terms of market cap size akin to global mid-cap stocks, we're looking at companies around the size of companies like Coles Group, Brambles, Computershare, Suncorp, etc. So as you can appreciate, these global mid-cap stocks are actually not that small, and they're quite mature businesses in terms of their size. If we look at the life of these companies, because one of the things also people think about is, well, if I'm going to invest in a company, how long has the company been around for? And if we look at the global mid-cap space, the average tenure of these companies in terms of how long they've been around for is about 20 years plus. And if we compare that again to the Australian market, it's akin to the life cycle of a company within the ASX top 50. So again, these aren't small startup stocks. These are well-established companies with a lot of room to grow over time when we think about that global mid-cap opportunity. So if we think about why global mid-caps, why would you consider global mid-caps as part of your investment portfolio? And there's a couple of notable reasons. First and foremost, that global mid-cap part of the market offers really attractive risk return profile. So when we're talking about those global mid-cap stocks, as I mentioned before, these aren't startups. These are well-established companies with a lot of room to grow. So from a growth and risk perspective, they do provide an attractive exposure in terms of global equities. Another important feature is the diversification offered by global mid-caps. So if you think about that global equity market, and if you think about what we've experienced over the last few years, certainly the global market has been very much dominated by a few high-profile tech names. Now, the global mid-cap part of the market allows investors to really broaden out the exposure and diversify that portfolio exposure within their portfolio. And the other thing is, compared to the small-cap part of the market, global mid-caps do tend to have much stronger balance sheets. So much more resilient should we go into a period where there's a bit more volatility in markets. So they're just some of the reasons why global mid-caps. But if we think about the long-term opportunity, over the long term, global mid-caps have actually outperformed the broader market over time with pretty solid risk-adjusted returns. So again, the return on equity that you get from global mid-caps has been very competitive if you compare it to the global large cap part of the market. And why now? One of the key features for considering mid-caps at the moment on a global level is really valuations. So if you think about global mid-caps compared to large caps, and if we think about, say, the US market, if you compare valuations, global mid-caps are trading within long-term averages, 30-year averages. So you're not paying an excessive premium for investing in global mid-caps as you may be in some parts of the large cap part of the market. So valuations are relatively attractive if you think about where global mid-caps are versus the large cap part of the market. And it does provide you, while these companies aren't startups, they do provide some interesting exposures in terms of some of those broader themes. One good example would be the consumer market and the growth in luxury goods. And a good example would be a company like Moncler, whereby, for those that aren't familiar, they're in the sort of luxury sort of brand clothing business. And have a lot of growth as we see a lot of the market, that middle market, move up towards that luxury brand part of the market. If we look at some other interesting companies, there's some really innovative exposures that we can get exposure to via global mid-cap. So one would be a company that we've invested in is Transmedics. They have a quite innovative technology which is involved in transporting organs for organ donorship and transplants. And one of the things that has been a challenge for that part of the market is how do you transport organs, but also how do you extend the life of those organs in that process. And they've effectively built a technology that allows the organs to live and breathe, so to speak, using this technology, which extends the life of the organs in terms of the patient and the transplant. So quite innovative technology. And again, this provides you sort of an interesting type of exposure where you may not be able to get that type of exposure in the Australian market. And if we think about some of the things we do focus on from a company perspective, which we think are important when you think about global mid-caps, is one, viability. As I mentioned before, you're looking at companies with strong balance sheets, a strong growth profile, sustainable companies in terms of where they are, in terms of the economic environment, and also credibility in market, which we think is important. And then if we take it a step further, we think it's important to identify companies, what we think are quality companies. So quality companies are those with a sustainable growth profile, as I mentioned, strong balance sheets. We also do look at companies that have momentum behind them in terms of price, but also companies that are trading at attractive valuations. And we think all of those components are important when thinking about global mid-caps, and particularly throughout the market cycle, where you might see markets focus on different parts. In some cycles, more on valuation, in other cycles, more on quality. So it's important to have a good mix to ensure that you can generate that strong risk-adjusted outcome over time. And from a Fidelity perspective, the way we sort of access and demonstrate these capabilities is via our Global Future Leaders Fund that is also offered as an ETF, FCAP, ticker code FCAP. And within that, that's managed by two experienced portfolio managers that have managed money over different cycles, leveraging our strong research platform. We have analysts located globally around the globe, which we think is particularly important in the global mid-cap space, where some of these companies are not as well covered maybe as some of the large cap names. And then finally, really strong risk management supporting that. So if you think about global mid-caps, the opportunity, we are seeing a lot more dispersion in markets, a lot more volatility. We think an active approach in this part of the market makes sense. That part of the market does look attractive to large caps from a valuation perspective. So we believe there's a lot more value that can be accrued from investing in global mid-caps. And really there's, in terms of growth in the return on equity these companies can generate, given that they're not at that real mature large cap part of the market, there's a lot of room to grow in terms of future growth, which we think is attractive as well. And then finally, really it's a diversification argument. So if you do have exposure to a broader large cap global equity portfolio, looking to diversify, this may be a part of the market which may be of interest.